Welcome to or welcome back to Sectors Made Simple, and we need some subtitles on this video, don't we? Let's get that up and going before we really get into the meat and potatoes of today. Alrighty, let's try this again. Hello and welcome to or welcome back to Sectors Made Simple. Today we are diving into one of our first topics for Sector September. We're going to be taking a look at the brand new Sector Summary tool and highlight some ways that this tool can improve both your current trading strategies and help you discover what could be your next trading strategy of interest. So if you've got any questions about this tool, questions about if it can be used for one thing or another, please feel free to put your answer or your question in the chat. I'll be more than happy to answer it. But without any further ado, let's get into the webinar. Before we do, one last thing we need to take care of, our disclaimer. Everything I cover today, the companies we highlight, and the examples that we give are meant for educational purposes and should not be used as financial advice. The recommendations that I provide here are simply to do your own research. That is the reason why we share tools like the Sector Explorer, is so that we empower you with a strong set of tools and knowledge to make informed investment decisions on your own. So always do your own research prior to making any investment decisions. Alrighty, let's dive into it, because Sectors Made Simple has a new tool. So today we're going to explore what that tool is, what information that tool offers, and provide 2 examples of ways that we can use this tool for our investment. The first example will show you how the tool can improve trading strategies that you already might be using. I'll also try and expand this subject to include different ways that you might come to the moment that you want to use the Sector Explorer. The other strategy will be brand new and will introduce a way that we can use Sector Explorer as the beginning of a trading strategy. So there's a little bit of setup that we need to do to explain what information the tool is using and how we can use the tool most appropriately. But if you're just here to see, is this tool something that you might be interested in or not, I want to cover the big topics up front. Notably, I want to introduce you to the 2 strategies that we'll cover later on in the webinar. So if these strategies are interesting to you, stick around or skip forward to the part where we are covering the strategies. If these strategies are not interesting to you, I understand, but I want to make sure that you know exactly what we're going to get into today. So the example of improving an existing strategy that you might already be doing is that we'll use the point and figure charts feature of the Sector Explorer. While the Sector Explorer name does make you think that it's just about sectors, it is an entire point and figure chart tool directly in the dashboard. So I'll show you how we can use the point and figure chart section of the tool in addition to a trading strategy. The brand new example is going to be a strategy where we can create a watch list of potential breakouts within a specific group of companies. Now, let's talk about what the Sector Explorer is, because I've hinted at it a little bit. The Sector Explorer tool is quite a bit of different information all put into one. So here's a quick summary of what the tool does. And if some of these words mean absolutely nothing or they're brand new terms, don't worry, we'll go through and define those terms together. So, first and foremost, the Sector Explorer is a point and figure chart viewer. It lets us see point and figure charts for both individual companies and for groups of companies, notably DPI. All of these charts are interactive. You can zoom in, zoom out, you can mark different boxes on the chart, and you can see specific dates that a box was drawn. The sector part of the Sector Explorer is referring to BPI, or Bullish Percent Index. The tool lets us use bullish percent indices for a bunch of different groups that were previously impossible to find. We can find the BPI of different market caps, mega, large, mid, and small cap. We can find BPI for different exchanges, such as the NASDAQ and New York Stock Exchange, or the entire market. And finally, of course, it wouldn't be the Sector Explorer tool if it didn't cover some sectors. All of the BPIs can be broken out by sector as well. So, for example, you could find the BPI for New York Stock Exchange technology companies, or New York Stock Exchange discretionary companies, or discretionary companies that are large cap. We'll dive into some of the more detailed examples of using it in a little bit, but for right now, let's do a little bit of review, because point and figure might be a new idea to you, BPI might be a new idea to you, or both of them could be a new idea. So I want to make sure we all understand the basics without having to get a PhD on either subject. So, quick 3-minute explanation of point and figure. It's a type of stock chart. Just like a line chart will show you price over a period of time, a candlestick chart will show you open, high, low, and close for a specific day or period. Point and figure is a stock chart. It's a way of viewing the price of a company and how its current price compares to its price in the past. But the biggest difference is that instead of tracking the price over time, we don't care as much about time. What we care about are the trends that price has. Point and figure focuses entirely on uptrends, which it denotes with X's, and downtrends, which will be shown with O's. So a point and figure chart will look like a demonic game of tic-tac-toe, where we have columns of X's for uptrends, where the price goes up, then O's, where the price goes back down. And we're always going from X's to O's to X's to O's. So it will look like this big snake that is making its way around the stock's price. But the beautiful thing about point and figure is that it only updates when the price moves enough to say it's worth it. So if the market is going sideways and the price of this company is only going up or down by 1%, we probably don't care. So it doesn't make sense 5 years from now to look back and see all the days that nothing really happened. Instead, point and figure will only update when there's something worth sharing. Meanwhile, point and figure in general is super good at a handful of things. It lets us follow the price of a stock over a longer period of time. With one point and figure chart, we can see years worth of price movement, compared to something like a line chart where we might only be able to see a few months, or it's going to start to look like a graph for ants. I don't know about you, my vision's not. The next is that it makes it easy to find reversal points. What goes up must come down, and we hope what goes down will eventually go back up. Point and figure makes it very easy to see where one trend stopped and another one began, and how big those trends really were. So, what it lets us do is see a better idea of the long-term and short-term performance of that company. The short term is going to be its direction. Is it in an uptrend or a downtrend? X's or O's? Also, it lets us know if the company is creating new highs or falling to new lows. This we can use as our long-term indicator, where we can say its short-term direction is going up, positive, and its long-term high or low is a low. So thumbs down. The last thing that's really cool about point and figure is that it can be used for price, but it can also be used for something like relative strength. We can take a comparison of two different companies and see how their prices are changing compared to each other. So we can plot that comparison using point and figure, and then use direction, X or O for the short-term win, and the new high or new low as our long-term win. That is the basis for many of the tools that we've created here at Sectors Made Simple. The other idea that this tool will use is bullish percent index, or BPI. This is a way of looking at and studying a group of stocks. BPI is a percentage from 0 to 100%. 0 is the lowest, 100 is the highest. And that percentage tells us what percent of companies in that group are currently on a buy signal. So if you see that the BPI is 35%, that means out of that group of companies, 35% of those companies are currently on buy signal. Or the other side, 65% are currently on sell signals. These buy signals go back to that idea of point and figure, where a buy signal is if the price of a company is going above a previous high. For example, in the chart that you can see right above me, this column of X's with the 9, which tells us September, has gone above the previous high. That is our indicator of a buy signal. So this company would get a thumbs up. It is in a point and figure buy signal. If the price goes below a previous low or below a previous column of O's, which are our downtrends, that would be a sell signal. So in this example we have here, we can see this O goes below the previous, and that would be a sell signal. The important thing to know about point and figure is it's black and white. Companies are always in either a buy signal or a sell signal. Can't be in both, and it can't be in neither. It will always be in a buy signal until it's in a sell, and then a sell until it's in a buy. Reading BPI is a little bit different than reading a stock chart, because BPI is often used as an indicator of how much opportunity or how much risk there is in that group of stocks. For example, if the BPI is 70% or above, if the price was $70 or above, that would be a good thing, right? But BPI is a little bit different. If the BPI is 70% or higher, we assume there's more risk in that group. Why, you might ask? Well, the simple answer is there's more chances that the companies in that group are overbought. How many times have we seen the stock market have some good news, run with it, and then realize that they passed their off-ramp about 2 hours ago? It's very common to see investors get caught up in all the excitement, buy up a bunch of things thinking that that growth is going to continue, only for it to come crashing back down. This can happen in extreme cases or more moderate cases as well. But in either example, it's a clear indicator that if the higher the BPI goes, the more risk there is, because now there's more room for those companies to fall. So we can think about it where a BPI of 70% or above we consider to be overbought. The other side of that is that if the BPI is 30% or below, we assume there's more opportunity because there's more chances that companies in that group are oversold, meaning they might be undervalued compared to the rest of the market or the rest of its group. But percent only tells us half of the story. Because we don't just care if the BPI is 20%, because that 20% could still be going down. That doesn't mean that there's opportunity. That just means there could be opportunity. So just as important as the percent of that BPI is its direction. The area of opportunity traditionally for point and figure is when the BPI goes from O's, downtrend, reverses into X's, or an uptrend. And if that happens below 30%, that's a pretty good indicator. The same thing is true on the other side. If the BPI is 70% or above, that doesn't mean jump ship immediately. That just means there's more risk. If that BPI starts to go back down, there's more room to fall. The Sector Explorer uses these two ideas. Point and figure as a way of looking at price, and then BPI that will look at a group of companies and tell us what percent of those companies are on buy signals or sell signals. With those two basic ideas covered, we're ready to dive into the Sector Explorer. I think the best way to look at the Sector Explorer is to look at the whole picture. Get a little bit, not intimidated, but a little bit whoa about it, and then break down each piece. Because the tool does offer a lot of information, and while we can just jump in with both feet, I want us to be able to take it one step at a time. So I'm going to show you the whole picture of what the tool looks like, and then we'll take each little bit and cover each one in detail. There you go. That's the Sector Explorer. All right, before the steam starts to come out of your ears, let's take this in 3 steps. 1, 2, the 2 might be hidden. Oh, no, it's not. Cool. 2, and then finally 3. Starting with number 1. One of the main pieces of information the Sector Explorer gives us is information about that BPI or that company. Because again, this tool can be used to look at the point and figure charts of both a company and a BPI. This table will give us a little bit more information about that company or that group of companies. For example, if we're looking at a company, let's use the example NVIDIA. What we find is information about their sector, what stock exchange they're a part of, if they're a stock or an ETF, and their market cap. So for example, here with NVIDIA, we can see that it is in the technology sector, the NASDAQ exchange, it is a stock, and its market cap is mega. Down below that, we can see what BPI groups that company is a part of. So NVIDIA is included in 4 different BPIs. It's included in the all tech because it's also in the NASDAQ. So we have NASDAQ technology, all technology, but also market cap. NASDAQ market cap, which looks, NASDAQ mega cap, which will look at mega cap companies within the NASDAQ exchange, and all mega cap, which just looks at any mega cap company from either the NASDAQ or the New York Stock Exchange. For BPIs, we get a little bit more information. We get, obviously, what group that BPI tracks, and usually the name is a good indicator of this. NYSE Tech is the New York Stock Exchange technology sector. NASDAQ mega cap would be mega cap companies in the NASDAQ exchange. In addition to the name and what group it tracks, we get the current BPI as a percentage. So for example, the New York Tech Group, 52% of the companies within the New York Stock Exchange technology sector are currently on point and figure buy signals. We get its column, which is direction. So an X means that that BPI is currently going up. So it is 52.15%, but that number is increasing over time. And then below that, we get how many companies are on buy signals and sell signals. And this is the most interesting part, in my opinion, of the BPIs that we have on the Sector Explorer. Because this is something that many other places that offer BPI don't include. So with this, we can see within the New York Stock Exchange technology sector, 158 of those companies are on point and figure buy signals. 128 of them are on sell signals. That gives us 52.15%. The second part is something that is exclusive, is only available for BPIs, because it's a little bit of a deep dive. It's great to know that 158 companies are on buys and 128 are on sells. Give me the receipts. Let me see which companies are in which group. So we do. For BPIs, we can divide that BPI up into all of its individual companies. So, for example, with technology in the New York Stock Exchange, we can look at all 286 companies. Then we can see a little bit of information about their point and figure charts. For example, we can see if the companies are in a column of X's, or a short-term uptrend, or O's, short-term downtrend. We also can see if they are on point and figure buy signals, breakouts, or point and figure sell signals, breakdowns. But here's the really cool part. You can filter and sort this table to only show companies on buy signals or sell signals. Or you can use columns. You can do X's or O's, or both. So what we see here is a list of companies within a BPI group that are all on buy signals, but their current price direction is going down in a column of O's. We could do this with buy signals and X's, sell signals and X's. You get the idea. So if we find a BPI that we think is very interesting, we can get a better idea of which companies are doing what. Pedro has a question. When is the long-term strength for the ETF strongest? How long do we keep this ETF for? That's an amazing question. So actually, let's just go to the Sector Explorer tool and find that out for ourselves. So the question is, when is the long-term strength for an ETF strongest? We have to remember that long-term strength is referring to a point and figure breakout or breakdown. A buy signal is a breakout, which is a column of X's going above the previous. A sell signal or breakdown is a column of O's going below the previous. So let's take a look first. Let me make this a little bit bigger for the presentation. Let's go to technology. So we're going to open up technology and we get its point and figure chart. And actually, I didn't mean to do this. This is going to be a great example though. Let's take a look at its price. It is currently in a column of O's. How do we know that? It's the most recent column. If we hover over one of these boxes, if you're on a bigger screen, by the way, yours will look bigger. Mine just looks fairly small because the screen I'm on is really big. What we can see here is the most recent update to this chart was on August 19th, when we drew the box for $256. It's not to say that the chart was last updated on August 19th, because it was updated as of yesterday, September 8th. This data is updated once every day after the trading day. So we do have information between August 19th and today, but if we take a look at the price of technology over that period of time, bear with me one moment, please. If we go and look at the price of technology, what we end up finding also, let me make this a little bit smaller so we can still see the subtitles while I'm giving examples. Subtitle number 1. Alrighty. Over the past almost month, we have seen the price go up about 1.8%. And the biggest change, the range, the highest to the lowest, was 3%. So the highest it went to was 266. The lowest was 258. Market closes. It probably did go a little bit lower and a little bit higher, but just to keep the example easy, 258 and then 266. That isn't enough for point and figure. We didn't make these rules, by the way. These are just standard guidelines for how point and figure is put together. So we didn't create the rules on these. We're just following what the industry standard is. It hasn't gone below the box for 256, and it hasn't gone above 272, which is what it would have to go to if we wanted to reverse from O's to X's. It's always easier for point and figure to change direction, to continue its direction than it is to change direction. If you want to learn more about that, by the way, we do have on our Learn site, learn.sectorsmadesimple.com. We have a full guide over there on everything that you might be interested in under paths. You can find our full introduction to point and figure in our learning paths here. These are entirely available to everyone, regardless of if you have a subscription or not. So if you really want to dive into charting, including point and figure charts, check out the learning path. But for today, what we care about here is the fact that this chart was last updated on August 19th. But check this out. It is in a short-term downtrend. But its most recent event, its most recent signal, was actually all the way back on April 24th. When, oh, by the way, these charts are interactive, you can draw on them. When this breakout happened here, it broke 1, 2, 3 columns of X's. So this is what's called a triple top breakout. This was the buy signal for technology. It went up and up and up and up and up. And then in July 31st, it started to go back down. Now we have two new lines. We have our buy signal again, which would be in line with the 272. And we have our sell signal, which would be a column of O's going below the previous column. So if we went into this 252 box, that would be a sell signal. But we're not there yet. We're still in a buy signal. This is the value of point and figure. is that we get clear lines to show us where these trends are, to see if we're creating new highs or falling to new lows. So the question is, when is the long-term strength strong for the ETF? It's when it's in a buy signal, or when its current column of X's is above the previous. A negative sign for long-term would be if this column of O's went below the previous column, or it crossed this 252 line. That would be a negative or a sell signal. So long-term and short-term don't have these clear, short-term is 1 day to 1 week, and then long-term is 1 month to 1 year. If there's a lot of price change, for example, in April, check this out. May starts here, April starts here. Everything that you see in between, all of these columns, that's all the price changes in April. So in April, there was a lot of stuff going on, and we see all of that change. We saw sell signals, no buy signals, and then at the end of the month on April 24th, a buy signal. May, June, July, nothing, just straight up. And then in August, we saw a little bit of bumpiness. So point and figure will show us long-term and short-term, but the real definition of what is long-term and what is short-term depends on how quickly the price is changing. If it's changing really fast, long-term could be a few days. If it's not changing very quickly, long-term could be a few months. Like right now, the buy signal for technology was given on April 24th, 2025. Which actually leads us very well into the third part of the tool, which is the point and figure chart. We can see the point and figure chart for the BPIs and for the individual company. While there are other point and figure charts that are available on other websites, we know that ours is different in a few different ways. Some of these are unique to Sectors Made Simple, others were just quality of life that we wanted to have. First, resizing. For example, if what we're looking at is July and August, we could use 100%, or we can make it even bigger with 110%. But when I wanted to go and take a look at April, there's so much stuff in April that we needed to zoom out to 70% or 60%. So you can zoom in and out to make looking at the chart easier. We can mark the chart, like you saw me show the lines for the breakouts and breakdowns. You can mark the chart and add highlights for different cells. And then, once again, like I showed off, we have dates. So you can hover over any X or O to see what day that box was drawn, making it easier to look back in time and see when a price change occurred. So that's the basics of the tool. And I say basics here a little tongue-in-cheek because the tool is extremely powerful. It includes introductions of new BPIs that we didn't have access to before, and a point and figure chart tool directly in the dashboard. And something that I'll show off here in a little bit is the fact that this tool works with all of the other tools available on the dashboard. But I won't spoil that for now. Let's just dive into the first strategy. The goal for the strategy is I want to find a top S&P 500 company that is close to a breakout. There's a couple of different things here that I want to dissect, take apart. Top S&P 500 company. To me, that is a company with high relative strength. That is close to a breakout. What that means to me is I want to find companies who might reach new highs. Because I don't want to buy a company who had its best day in the market 2 weeks ago. I want to find a company that is hopefully going to have its best day in the upcoming week. So to accomplish this goal, we're going to use 2 or 3 different tools, depending on how into it you really want to get. The basic example that we'll do, we'll use the S&P 500 screener to find the top company. Optionally, we can use swing trade setups. And I'll show an example of that. But then we'll also use the Sector Explorer, surprise, and we'll be focusing on the point and figure chart of that company. The reasons why you might use this strategy is because many people are already looking at top companies. It is not some incredible revelation, this insane new idea that we came up with to find the top companies in the market. So we're not telling you need to find a new way to discover breakouts or to find the best companies. That's something that you might already know how to do, or something that you've learned from a previous webinar that we've done. What we're trying to do now is talk about why this Sector Explorer will make that strategy more powerful. So, ways that this strategy could be used is to find opportunities for active trading like swing trading, where you hope the price goes up or goes down in the short term. But the other one that applies to everybody is we just want to make more informed decisions. There is a lot of things that happen to the stock market that we can't account for. The best thing that we can do is take in more information to make an informed investment decision. And the Sector Explorer tool gives us a lot of that information in a very simple to understand way. So here are the steps for this strategy. First, find a company that we're interested in. For this, the basic example, we're going to use recent breakouts, or we're just going to find companies who might be going on breakouts. And then for each one of those companies, we'll click on their ticker symbol because the Sector Explorer tool works with swing trade setups or the S&P screener. So you can click on the ticker symbol to see the stock chart for that company. Then we'll look for good or bad signs. No, you don't need to bust out the tea leaves or tarot cards to figure out what's good and bad. I'll give you some examples. A good sign could be that the price is trending positively over time. If you see that the price is generally going up, that's a pretty good sign that that momentum is going to continue. Also, we're interested in seeing that the price is actively moving. Especially if we're interested in buying this first swing trade, the last thing we want is to find something whose price last updated on something like August 19th. I'm looking at you, technology. When there's not a lot of price change and we're mostly interested in poking it to see it do something, we want to see that that price is moving. And then we want to know that the company is in a strong sector. You don't have to do all of these. You could do none of them, but adding in these different pieces of information will help us make more informed decisions. Bad signs are typically the opposites of the good signs. So, a bad sign could be a price that is way above its breakout price, because then it's a guessing game of it's a game of chicken. Of how high is it going to go before people think it's a little too high. We don't want to get stuck buying it at the top. The second is that the price is moving too quickly or too slowly. Some stocks, a 5% day in the market is insane. For other stocks, Tesla, Nvidia, 5% is an average day. And lastly, if the company is in a weak sector, meaning the companies in that sector are not leaders, or if it's a risky sector, meaning its BPI is way too high. So let's dive into that strategy together. So first things first, we're going to use the S&P 500 screener. And what we're going to look for here is companies whose prices are going up or have recently gone on breakouts. This is a really great way, in my opinion, to say, you know what? I don't want to invest every day. I don't need a day job. I've already got one. I want a pastime. I want something that I can decide, I'm going to go check the market today, see if there's any opportunity. This strategy would probably work for it, where you can go in, find opportunities that are available right then and right there, and keep your life easy. So let me show you. If we go in here to the the S&P 500 strength matrix, what we're looking for is stocks whose prices are currently going up, so the direction is an up arrow, are currently on a breakout, saying that they're on a buy signal. And then if we scroll over to the right, we see what date that breakout happened. Some of these could be as old as over a year ago, where we see that this breakout happened on August 23rd, 2024. Way too long ago. But we can click again and see companies that have gone on breakouts recently. So here, again, this data updates once every day. So as of yesterday, September 8th, we had, 7 companies go on buy signal. On Friday, we had 3, 13, 14, 15, 16, 17, 18 companies. 18 out of the 500 companies in the S&P 500 went on point and figure breakouts on Friday. And then we had 7 more go on buy signals today. Now we get their relative strength, their grade. So if I'm trying to decide between, for example, GEV or TKO, one has a relative strength of 49%, meaning it's only better than 49% of the S&P 500, or TKO, which is better than 89.4% of the S&P 500. To me, TKO is way more interesting. It went on a buy signal today, but it is way stronger of a stock compared to the others that went on buy signal. If we hover over the ticker symbol, you'll see the little underline. We click on it, it will open up that company in the Sector Explorer. We'll get a little bit of basics about it. For example, we can see it's in the consumer discretionary sector, it's in the New York Stock Exchange, and it's a large cap company. Let's look to see if we can find any good signs or bad signs. Good signs. Price is trending positively over time. It had a fairly rough summer, but apparently it decided that August was its time. And we saw it go on a breakout on August 10th, right here. Continue up, have a correction, which went into a column of O's, before it started to go into X's again, and went on another point and figure breakout. When? On September 7th or 8th. So this company went on a buy signal today, and its price is actually trending positively over time. We see, when did this reversal occur? August 7th. Since August 7th, it has been going up with one correction in the middle. So good sign, price is going up. Is the price actively moving? Well, We have something from August 27th, 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 September 4th, September 4th, and then the breakout today. It's moving decently. That's enough change to say it's positive in my opinion, but not enough to say that I'm going to be worried about what's going to happen tomorrow morning if I buy this thing and I decide to sleep in. The market opens at 6:30 a.m. Pacific time. I don't know about you. I'm not really a morning person. That's a little bit early for me. But the last thing I want is to look at the clock at 7 o'clock, feel like I need to open up my investments first thing in the morning to figure out if TKO got knocked out. And then the third thing, the company is in a strong sector or is not in a weak or risky sector. That's where these BPIs come in. And these aren't just fancy little colors. You can click on them and open up the BPI for that group. So here we can see the BPI for the discretionary sector. 50.5%, I'm rounding, and in a column of X's, meaning that half of the companies in this group are on buy signals, but that number is going up. So to me, we've got 3 thumbs up. The price is trending positively over time, the price is actively moving, and it's in a strong sector whose BPI has opportunity and not too much risk. Let's try another example. Let's go back to this. Actually, let's do a swing trade setup example. Because here our goal might be a little bit different. What I'm looking for here are companies who are not yet on buy signals, but might go on buy signals soon. I'm going to quickly walk through how to set this setup screener up. If you're interested in more detail, we have covered the swing trade setups tool in the past with market structure. But for today, I'm going to breeze through it so we're all on the same page. Setup type, we're going to use potential breakouts that will look at companies that are close to their breakout prices. For sectors, I don't care. Direction, I want it to be going up. And its signal, I'm going to choose breakout. Why? I want to find companies like, what was it, TKO? I want to find companies like TKO, where I want to find it right here or right here. This is where I'm interested in. I want to find the company at that box right there. Because its long-term trend is still positive, and we're just hoping it goes on another breakout. It's easier to continue the momentum and bounce back from a bad week or two in the market than it is to change directions entirely. So I want uptrend and I want breakout, because there's going to be hopefully less resistance with confirming a breakout than there would be if it's trying to create a brand new buy signal. Alrighty, that's 193 companies. Oh, might be a little bit too much for me. We could go through and sort by a top sector. For example, we already know that discretionary looked pretty interesting. So let's sort by discretionary. 20. That's better. Now we can click on these ticker symbols and open up the charts for these individual companies. We could see this and decide if we like it or not. We could go through and check each company. And this is where we start to get into a little bit more of the art instead of the science side. So it does come down to us a little bit to figure out what charts look the best to us. For example, this might be a pretty interesting chart. Is it the best? I don't know. But if I'm just trying to save myself time for finding swing trades, this would be a good way to do it. Here, we see that it tested resistance and didn't break it. So we know that there's a little bit of momentum pushing it in the right direction. It is already on a buy signal. its price is moving because we had September 1st here, September 2nd, 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 3rd, 3rd, 4th. Maybe if you're trading just options or day trading, September 4th might even be too far away. But for me, that might be perfect. So this is, again, where you get into the art side of these strategies as opposed to the science. But the hope is that you can see the value for both casual investors who just want to find companies on a recent buy signals with as little charting as is necessary, or people that want to dive in, look to find the perfect swing trade opportunity and scoop it up with the hope that it goes in the direction they're interested in. So that is strategy number 1. Let's now cover strategy number 2, where the goal is to find potentially oversold areas of the market. For this, we'll use the Sector Explorer first to find an oversold sector, or a sector whose BPI is going up but is not overbought. Then we'll use swing trade setups to filter by that sector. Why you might use this strategy is that we want to find companies who are close to their breakouts, where the odds are stacked against them, where the odds are either stacked against them, like the BPI is above 70%, or the company is already in a sell signal, or the other side, which we've already looked at, if the odds are in their favor, hoping to confirm a breakout with opportunity. Why does each one matter? Well, if you're trading stocks, your only real option is to hope that the price goes up over time. So there, you're probably looking for things where the momentum is in your favor. You're getting a bunch of thumbs up and good signs. If you're trading options, you have the choice or the option to try and make a profit if the price goes down. If you're interested in the price going down, you can buy put options where you would profit off of the stock's downward price movement. This strategy can realistically be used for either, and it will be pretty similar to what we just looked at. We're going to find a sector that we're interested in. Some ways we can do this are that we can look at which sectors are gaining or losing strength on the matrix, and then search for those individual sectors using the Sector Explorer. In the future, we will be trying to add better ways to look at all of the different BPIs without needing to look at the chart of every individual one. But for right now, we can still do this strategy pretty easily. We're then going to filter swing trade setups by that sector and use the same filter we just looked at. Potential breakouts. And here, I'm going to focus on hoping that the thing goes up. So we're going to add a filter for that breakout, hoping that it goes up in price, and then use the sector screener to find what that breakout price is. And then if you're really adventurous, you can look at those same good or bad chart signals from point number 1. Let's do it together. Instead of just saying discretionary for no reason, let's go to the sector summary tool and try out if we look to see which sectors are gaining strength right now. Here, if we sort by 1 week ago and look at momentum, we find that technology, XLK, is the sector that is going up the fastest. It has gained +5 strength in the past week. I'll go to swing trade setups and I'll plug in here technology. We then get a list of 11 companies. And here we would go through a very similar process. How about this one? Well, if I want it to go up, it's tried to create a new high 1, 2, now 3 times, and it hasn't. I'm a little iffy. It's trying to do the thing that I want it to do, and it hasn't done the thing. All right, let's try another. CIEN. All right, now we're talking. What do we have here? We have a triple breakout that occurred on September 3rd. Its price went up and up and up and up and up. And then all of a sudden, people said it might be a little bit too high. So it dropped. But now the momentum is picking back up again. And we see on September 8th, not 7th, 8th, we reversed back into a column of X's. The hope here is that we see the price continue to go up past its previous high. If we want to be thorough, because if we go back to our idea of good and bad signs, price is trending positively over time, thumbs up. Price is actively moving, thumbs up. Company is in a strong sector, well, I don't know. Let's look at all technologies BPI. Ugh. Going down right now. 41% in a column of O's. Okay. How about New York Stock Exchange tech? Here we see a slightly different story. If we look at the New York Stock Exchange, we see that its BPI is 52%, not 40, and its BPI is going up. In fact, it was going down until August 19th, and then on September 8th, yesterday, that BPI reversed into X's. Check that out. We have now found a company in a group that's just starting to swing back into more companies going on buy signals than sell signals. And we found a chart that, in my opinion, looks really good for another breakout signal. We had a triple top breakout before. We had a little bit of pullback, and then we hope for a continuation. If you're interested to see what that might look like, here is an example of what we could see. Looking at the chart here, we have our triple top breakout going up, and then the hope is that this column would continue. So ultimately, these are just 2 examples of how this tool can be used. And I want to mention that right now we're only focusing on how the Sector Explorer can be used in addition to other Sectors Made Simple tools, but there is no reason that you can't use the Sector Explorer with other information that you find out there, with other strategies that you might be interested in. All of it. For example, say you own NVIDIA and you want to know how much risk there is. Check out NVIDIA, go in and look at the NASDAQ tech. Oh, okay. That's where the negative BPI is coming from for technology. It's in the NASDAQ, not in the New York Stock Exchange right now. Or is it in mega cap companies? Well, it looks like it because we have 69%, but that number is going down. By contrast, because CIEN is in large cap, let's take a look at large cap. This one is also going down. So you're starting to see how just pressing a few different buttons and poking around to see what information is out there helps you to gain more confidence or to doubt just a little bit more that what you're looking at is the right or maybe the less confident answer. So ultimately, these are just 2 examples of strategies that can use this tool. What's next is that we're continuing to work on the Sector Explorer tool. If you noticed on the dashboard, there's a little beta tag next to the tool. This tool is still in development, and we are making improvements to make the tool more powerful, but also easier to use. So, As we approach the full release of the Sector Explorer, keep your eyes out for some welcome additions, including more BPIs, the ability to set alerts for when a BPI reverses, or a BPI crosses a certain percent threshold, and more integration with other tools on the dashboard. These are the ways that we are working to improve the Sector Explorer and all of the tools that we offer at Sectors Made Simple for everyone. But if you have ideas or features that you'd like to see us add to the Sector Explorer, feel free to reach out. You can send me an email at support@sectorsmadesimple and ask me your questions to see if the Sector Explorer can help a strategy that you're already using, or to suggest different features or pieces of information the Sector Explorer can provide that would make investing simpler for you. Thank you all so much for joining. I hope you enjoyed this first look at strategies using our brand new Sector Explorer tool, and I'm very excited to continue providing more strategies, more resources, and more insights into the market throughout Sector September. Thank you all so much. Take care, and we'll see you all back very soon. Bye.